Let's now connect with Rahul Bijoria, regional economist with Barclays. He joins us from Singapore. Rahul, good morning. Thank you for joining us. Rahul, of late, India has made all the right headlines, new reforms, attractive valuations. Do you think the recent outperformance what Indian markets have reported, that's here to stay? And in general, do you think Indian markets have got re-rated?
Well, I think fears of a very hard landing in India have probably abated at the margin, but the growth inflation dynamics still remain quite challenging in the near term. What has been encouraging is that the currency has stabilized, and that is bringing back a lot of foreign investors, particularly in the equity and the bond markets. We think this momentum has the potential to spill over into the real sector as well, but we would need a lot more steps, particularly on fiscal consolidation from the government, to bring back some large ticket investments.
So Rahul, there is much talk about the RBI cutting rates in India. With the inflation high and growth seeing some stability, do you think that would happen in the first place?
Well, it's a challenging environment for the RBI to calibrate its policies. I mean, with another round of global easing, commodity prices do have an upside, and we are pretty bullish on global commodity prices going into 2013. In such an environment, the central bank really has to balance the ongoing growth slowdown, high inflation in the country, and at the same time has to respond and move in sync with some of the measures that the government has taken. Our base case is that the central bank will not cut rates in the upcoming policy meeting, but will probably do some steps which would mean that liquidity would be available for productive lending in the sectors in the economy.
So Rahul, how do you see policy action playing out in India going forward?
Well, we think there will be some more action. We do expect the government to announce a few more steps to basically boost sentiment in the business sectors, both domestic and international. Even from the central bank, we think once inflation comes below 7%, which will probably be by end of the current fiscal year, more monetary easing could be in the pipeline. We do expect them to cut rates by about 100 basis points by middle of next year. That could provide another incremental boost, which could help growth at the margin.
So, what about the focus on currencies, emerging market? What's the call on the rupee right now?
Well, in the near term, the rupee is one of our favored longs, along with the Mexican peso and the Russian ruble. In case of INR, as I said earlier, we have seen a stabilization on both the current account and on the BOP side. Portfolio flows have again picked up quite a bit, which again stabilizes the availability of dollars onshore. So in the near term, there is potential for currency appreciation. We think 52 can be easily breached by end of this year. Over the medium term, however, inflation differentials are going to remain fairly high, which means that the currency is going to become a little bit more expensive on a real effective exchange rate basis. Hence, we are not very bullish on the on the long term. We are expecting INR to be around 52 in a year's time and see some scope for depreciation post that.
Rahul, so do you expect, or what do you expect from the broad earnings season this time in India, or for that matter from emerging markets?
Well, in case of India, the earnings season has been progressing relatively well in our opinion so far. We do think that there will be certain sectors which will be hit, particularly the capital goods industrial sector, which have been bearing the slowdown in the investment cycle. However, there are initial signs that things are turning around, and that could favor some of these companies over the medium term. In terms of banking stocks, we don't expect a lot of pickup in the near term, particularly with restructuring of onshore loans going on, and we do expect this to continue. However, corporate profitability remains relatively high. We think portfolio allocations to India could improve at the margin, particularly if the growth outlook improves, and that could provide some fillip to stock markets in the country.